Okay, so somebody asked me a question about where to start in trading. And that's, I just listened to an interview. This French trader, I'm going to put a link to the interview. Hopefully I can find. It's a series of interviews done by this guy. I can't pronounce his name. And he's asking real traders, like, how do you trade and stuff? And what it comes down to is you really have to be a solo trader in a way. In other words, you have to tap into your strengths and weaknesses. So you know what you're weak at, right? So if you go to the gym and you start punching a bag, you're going to use your dominant hand, right? The hardest thing to do is to hit it with the other side, to do a balanced effect. Not that the market can see you punching it, but if it was a real fight, if you're symmetrical, or if you're, ambidextrous, then, the person can't tell what your dominant side is, and so you have an advantage there. The same thing in the market. If you don't have like this, I got to buy and I got to sell, you don't have this predisposition going in that kind of, because there's constant opportunity happening all the time in the market for buyers and sellers. So taking a side is kind of tough, but you'll hear over and over again, this is what I heard when I was, like when you start trading, you'll hear this stuff like, well, the trend's your friend, right? I remember the trend was your friend. I thought was the biggest joke I'd ever heard, because I thought, well, this is like having a Doberman pincer that's on meth or something, right? And you said the wrong word, and you look over and your arm's missing. So what does that have to do with anything? Of course, well, that would have been different had you been in a super small position during the trend. Trend trading is kind of a ridiculous notion, because even if you are trend trading, you still need a place to get in that's safe. And it's safe, I mean, as far as, another thing, people talk about risk. I guess I'm just going to jump all over. It's not going to make any sense, because you can't really attack this unless you get down to the risk. The true, nude woman in the room is risk. So, because nobody talks about dollar risk, they just talk about pips, which is kind of like hilarious, right? I'm down 100 pips. Okay, now, does it mean that if you're down 100 pips, it depends on what that one ticket is sized at. Now, there's no reason to go past, unless you're worried about execution. You're trading so big. But you can easily trade, go from a 1K to a 2K and be completely 100% more risk per ticket. In the trading world, the place to start, the interview that I heard, what the guy said was, just buy a micro lot, $1,000 of currency with a 100 pip stop, and just manage that trade. As soon as you do that, what's going to happen is, and at this point, it's about examining your feelings. So you're trying to make money from a logical game, right? Supposedly you can build an EA that's going to do this, it's going to do that, it's going to make sense, it's not going to have any emotions. But you're not that, you can't be that person. So you need to take those emotions and figure out how to put that to your advantage. So say you do buy 1K, you're down 20 pips on a 1K. And if you wait till that gets stopped out or makes 20 pips, now at this point, it's not going to be any different than any other trade you're ever going to get in the rest of your life. This is a template for every fucking trade you're ever going to take for the rest of your life. Am I in too big? And the questions that are going to come up. Am I right about the direction? Now here's where people just totally get fucked in the head. There's not a video about trading on the internet that doesn't talk about directional trading. It has nothing to do with making money. you can get the direction right and get the size wrong, get the stop wrong. You are totally screwed. You can design the prettiest car or the prettiest motorcycle, but if you can't fit the fucking engine in that thing, right? So you usually have to build stuff from the inside out. You know, it's like the joke, the guy builds a boat in his house. You can't get the fucking thing out the door. You have to think about the size. And if you're going to build an account, you start off with little building blocks, right? You build that account. It's not going to make any difference. Most people couldn't put on a standard lot like right out of the gate. Say you're making, even if you're making good money, say you have, and this is another thing. If you've got $5,000 to blow out the window every month, you got extra grand. How about you got an extra $200 a month to blow? Just fucking blow it. Trade it. And don't even fucking look at any of these trading courses. Now, I know this is really counterintuitive because what you're told is, this is what I've been told for years, and my parents are like, fucking, you go to school, you're already a genius in their mind. I think it's complete bullshit. Walk down the street. There's street smarts, and then there's book smarts. Trading is based around book smarts. You don't even, people that sell courses don't want to call it gambling. Like, you go to Empowered Trading. The reason why they don't want to call it gambling is because you just need a hooker for that. You don't, like, no, you just do it. What they're saying is, oh no, don't put on a trade with your hard-earned money. So you hear them use all these phrases, right? This is from the school of, I'm afraid to trade, or I'm like, oh, this is risky. And then they'll run that disclaimer in the font. This is the funniest thing is the government, I'm not a conspiratorialist, but people would make this assumption that the government doesn't want you to trade because look at these disclaimers. Oh, you know, you could lose. Just don't trade with money you can't lose. Well, I wouldn't run a hooker I couldn't lose. You know, in other words, what do I know, right? What do I know? I just bought a car. Well, don't buy a car that might blow up on you. Really? Okay, well, that's a great checklist. So, but you are going to blow that car up. People don't understand. You need to blow that car up so you can see what it feels like to blow a car up. And then when you drive, you're not scared out of your fucking mind going, what if this car blows up? Like, who's driving a car down the road? I mean, the most astounding thing here is you can drive down roads here where it's 55 miles an hour. Now, if it's a two-way road and all this separating you is 3 feet, you are close to death, constantly close to, what's preventing you from cutting the wheel over to the left? Nothing. Right? So you're always staring down the gun of fear and greed when you're trading. You're always in this state. This never changes. Now, you may just get numb to it, right? And this is what happens after you learn how to ride a bike. At first, you have training wheels on, you're scared of your fucking mind. The training wheels would be, okay, you're gonna trade really small, just put 100 pips stop in there. Because what you're gonna find to come to find is that you're just, it's about you. There is nothing outside. It's always going to be, okay, well, this is what and it's just $1. It's just $1 amount. And the thing is that it's how you, like if you're going to swing trade, even in a trend trade, unless you're scalping to just take little chunks out of the market, like this guy I saw do a video where he's making like 5 pips on this thing. Hilarious, right? You can make 5 pips, and he's saying don't trade big. You hear all sorts of weird stuff. Everything you're hearing is people speaking out of fear, right? How they got around that, or, well, I got this indicator that's going to filter out and give me high probability trade, right? And that's also another thing, is probability is independent of risk. In other words, a high probability trade would be to put in to buy at the market with a 5 pip take profit with a 100 pip stop. I would say the probability of you making money, making a profit on that trade is a lot higher than a 5 pip stop to make 100 pips. But people will say, well, the ratio is bad. Well, think about this. It's completely up. It doesn't make sense. Why? Those are completely different stories. Probability, the highest probability is that the market's going to go up and down. So how big is that move? And where is your, maybe you don't have a stop, maybe your account's a stop. But and also if you're not in the market, so let's say you tell yourself, well, I'll trade 2K per day. One order I'm going to just get in. And the other one I'm going to plan it out and put an order in. Maybe when it goes, maybe it's a stop order, which I wouldn't be a big fan of. But I go for the limit order, say, if I'm going to buy. Now, it doesn't matter whether you think the market's going up or down. Because even if you think it's going up, you still want to buy as low as you can. So another thing is, a guy asked me, a guy said, well, I can't believe you're buying and selling new lows. Or you're buying new lows, selling new highs. Well, you have to. Because that's the better price. Because for you to make money in that trade, you need to get out on a price that is, if you sell high, you need to buy it back low. So it only makes sense that you would sell it above where you're at. And since we're not there yet, you have to throw a limit above you. And some people call that aggressive trading. I just call it trading. The other approach is people put a stop and they go, well, I'm getting confirmation on entry, the pattern breaks, and it blah, 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 breaks out of a range. Okay, great. But you can't just have that one order in. This monolithic view of trading. I get it. It makes sense, right? This is the approach. A typical approach to trading is build the Holy Grail, or build the flawless EA and launch it. The problem is, how big is that EA going to trade? Even if he's right. If he's really right, you're going to load him up. But what if he's wrong? And is he getting in on a stop, a limit, a market? It's such a complicated, and I only trade one currency at a time. I get the idea that you think, oh, well, I got this pattern that works, so I'm going to go look for Gartleys all over town. Right? I'm going to look for this hot babe. Like, oh, yeah, I love blonde girls. So, yeah, you're going to filter out. You're only going to look for, okay, that's your pattern? Great. So you're going to miss out on all these brunettes that are smart, right? You can actually have a conversation. So that's always the fork in the road. And I realized that if you are bored, naturally, you're going to start looking for other places to go. But when you're watching it, you can only put one tick chart per MT4 platform. You're watching the tick chart, and you're like, oh, there's a trade there's a trade there. But, of course, then it depends on how quickly can you execute that stuff. So my approach to trading is about execution. How can I buy at the market? I have a button here. So I could buy right now at the market British pound, right? Looks like a good buy here, double bottom on tick chart. Get the weekly here. So go to the so you think you're good at trading, go to the 5-minute chart. Well, so if you've never traded before, just trade the 5-minute chart. Here I would assign a hotkey, or you would just you could manually keep placing sell stops below. Just mechanical trading is the only way to trade, in my opinion, because you're going with order flow. You don't need to take an order flow class. You have trailing sell stops. This was any money manager robot's doing right now on the 5-minute British pound. So you would either manually do this, or you could have a robot do that, right? But the robot's going to get his ass kicked. And then, of course, he goes short here, and he starts running. But is he trading big enough? This is my question. Is he really trading big enough to make the money he should make from that move? And the one thing a robot can do that you can't do is babysit this. But he's still not going to, you really want him to. If you wrote a robot like that, of course, when this comes, he's going to just get his ass kicked, right? So this always is the, look at this London Open, or what do you want to call it, right? But how do you maximize that move? That's the question. Anybody can fucking sell here and get out here. But the trick is to get in really fat here, be out of half of the position here, and maybe you even, see this is a doji here, you even added, right? When it gets like this, you need a trade plan for that. And all of a sudden you got to dial down to just trading this. Buying support, buying support, selling resistance. That's the ultimate trader. The guy that can trade this shit and this shit. Yeah, this is not age-appropriate material. If your kids are listening, I'm going to use verbal lubricant. People are so hung up on it. And the thing is that, you know, this thing about risk is so hilarious. Because what risk is it to you? To risk $1. Now, your ego would be risking quite a bit, actually. And another thing is these people go to these trading things. I like how they say, Empower Trading says, don't go to any of those trading rooms because they're just people, but come to ours, right? Well, fuck, don't go to any of them, right? It doesn't make any sense because think about it. Think about it. It's like if you say you're a really good trader, right? And you're so good at calling the market. And even if you're not, right? Maybe I'm trying to fade you. Maybe I'm going to go against you. You're such a lousy trader. But the thing is when you you're in a position, and the bigger it gets, the more important that position typically is for people. That's the hard thing to lose, is that the size goes up, and now your emotions would go up with the size. So if you didn't flinch about losing $5, are you flinching about losing $5,000? Well, you really shouldn't technically, because hopefully percentage-wise, that's not going to dent your lifestyle. But I always wonder when I see a $5,000 loss, I'm like, God, couldn't you have just lost $2,500 twice in some kind? I don't even know. I'm assuming this is one ticket, and you'll see people trade so fucking big on one ticket. And I'm like, wow, you really fucking, that's aggressive. To me, that's aggressive. Okay, so I'm going to buy here at the market, right? Before the stop of this 5, well, this is support, right? Let's just buy here. I'm just going to buy like a whore. This is a demo account, by the way. So I have a buy the market order here. I think it's buy at the market. Maybe it's not. Here, I'll buy on stops. I think this is programmed. So here's my take profits, right? It's scaled out. I'm only trying to make it to the top of this, where this thing went falling down. There's plenty of money to be made on a 5-minute chart. Plus, the learning is quicker. No waiting for patterns to unfold. And if you're getting out fib tools and no, the fib tool is just a way to keep from over trading. You know what fib tools are for? They're for you to buy low and sell high, because you're just looking for an excuse to place an order somewhere there, right? It may not fill, and the idea that you're going to dial a 2618, you hear these numbers that fucking crack you up. Now, the people that teach, I guess, you know, you can go to many of your university and hear complete utter nonsense taught. And you're paying good money for that. So we always have to check our premise, right? We have to ask ourselves, how do I know what I know? How does this fit into logic? And people don't question somebody like, well, you go to Scientology, right? Then people aren't going to question. You question that, you're like, what? You're questioning this? Man, you just like this ICT shit. Inner circle, how dare you? This guy, no. Look, we all know where the market's going. Right? When it's going down, oh, it's going down. Okay, well, why aren't you selling? Well, no, I'm waiting for, now, if you're waiting for an entry that's below where we're at, the obvious question a child would ask, why don't you just sell here and write it down? If that's your entry, why don't you sell here, write it down to the buy, and get in and go the other way? Oh, well, I can't be, because I've dialed this, I got 10 grand into studying Gartley patterns. You think I'm going to give that up to just jump in the market like that? But that's, see, so I buy here again. I'm going to buy on stops here. They're really market orders. See, I'm so close to the market here. Getting in at stops is kind of silly, right? But that's the confirmation entry. People are wanting that, right? Like, make sure she's got her papers, and you did this. You know, you don't want to have sex with her unless you take her to the clinic, free clinic, and see if she's got any diseases. I get that approach, right? That makes sense. And in trading, you need to have this carefree state of mind where you just don't give a fuck. So that comes out of the fact that you just, you're okay with losing. Because being okay with winning is also a problem, because now you're doing stuff that, and from all the stuff I hear people talk, well, there's very few people that think, a lot of people think, well, there's just I don't know how many people think it, but that there's a pie, right? And if one guy's got money, one guy's rich because you're not. Like, there's only so much money, and they'll tell you trading is a zero-sum game, right? This is a zero-sum game. Well, Jesus Christ. There's people making money just from the commissions. There's people making money on the servers, just having a server open for you. But I'm not... And the thing about the banks, right? What are the banks doing? Fucking banks are people. These... even an algorithm's a person. Robots are people just taken into digital form. Just a crude version of a person. Of course, they have the idealized robots, right? The robot you call up and it's polite and shit. Where's the fucking angry robots? You know, there was this thing years ago. It was like it was a thing, very first kind of like playback sample. It was a little thing. It was a bag of insults or something. It was like, this is 20 years, 30 years ago. You press a button, it would go, fuck you, eat shit. It would just, it's fucking hilarious, right? You walk around this thing, would just rattle off a bunch of insults. So they got that Siri shit over at Apple. I hate Apple. They got that Siri shit, and it's like, where's the angry Siri? Where's the inappropriate? We need inappropriate robots, like the robots, the EA. I took an EA and I flipped it over. I told it to sell when the moving averages crossed backwards. Actually, I took this fast moving average and I made it slow, so I forced it to trade backwards. It did pretty good, actually. It was getting in on the counter crossovers. Just simple stuff like that. I mean, you could just see, and then you play back the robot and you're like, look at this thing. It's fucking making money. Yeah, because it's trading ass backwards. Counterintuitive. Trading is so counterintuitive that it's impossible for people to even believe how much money is made from doing what you're not supposed to do. You just can't get in here. I just watched another one. This guy, holy fuck, this guy, Forex Live. Yeah, Forex Live guy. Oh my God. This guy's got a 100-period moving average of 50. He's looking for this. He's like, well, the bears are in control. The bears are in control. Like, what the fuck is this? The bears are in control. So what? What does that mean? I sell here? I write it down? Well, I won't be convinced it's going up till it clears above here. I'm like, oh, okay. So you're gonna, and then if you watch this video, and then you go and see, the guy did a video a year ago. It was about the British pound. Well, I'm not convinced. Okay, but what the fuck? If you're going to counter trend trade it really big and make a bunch of money, then, right? I mean, we can all see the trend. The question is, can we jump on that trend right now and ride it? You would think that you could, right? The trend's your friend. Well, just jump on it fucking right now then. You know, just forget it. It's easy. Well, yeah, but then what, right? Maybe you're right. Maybe it does keep. Maybe you do ride it up, but you're like, damn, I wasn't big enough to even hardly make any money on that. Yeah, because the threshold of pain, you're in small enough, so this sizing issue is like going to the gym. Nobody comes in the gym, you know, like if you're trying to get all muscular, look like an action figure. I still don't understand that. Isn't that tough on your heart, pumping all that extra? When's this company going to call out these muscle builders as being out of their fucking mind? That's a disease. That's just worse than being obese, isn't it? What the fuck is with these people? I go, look at my biceps the size of your thigh. So what? You're a fucking idiot. Okay, no offense to any bodybuilders out there, but I just don't get it, right? What, you're an action figure? What, you fucking brainwashed from you too much G.I. Joe when you were a kid? What happened to you? But you can see what happened to people when you see them trade, right? So trading is like looking into the soul of a person's, all the hopes and fears, right? But no, it would definitely, anything that you're, like if you're an impulsive person, which I am an impulsive person, so I'd love to just jump into stuff. I'm like, fuck that. Oh, I'm not reading the directions. I did read trading books. I never read a novel. I always fall asleep. But trading books, I thought, well, this is certainly going to be the answer. So after spending like $2,000 on trading books, I thought, well, this must be where it's at, man. I mean, look at these fucking books. And they're Wiley and Sons. Who these fuckers live in? These guys are fucking, talk about making money. These guys are probably at $100 a book, and I'm like, okay, the paper's good. This would keep me warm if I have to throw it in the fire. But like, what in the fuck is with this book? And then it's like, this guy's a technician. He's just not a trader. He's a technician. Well, that's who you want to do brain surgery on you. Right, you don't want some scalper to like hack into your brain and go, you know what? I don't know. I think it's over here somewhere. Well, let's just spread the risk. But I'm about spreading risks. This is why I have all these fucking tickets in the market, because I don't fucking have the exact. Like if I knew the exact entry, wouldn't I just trade super fat on that one ticket? But I don't know how far the market's going to push into a vacuum. It pushes. Here on this, let me expand this out. Here, what do you think, right? Double bottom on the 5-minute chart trading. Probably the best way to learn trading, or get over your fear of trading without confirmation. But double bottom. As soon as it closes here, you could pull the trigger, but why wouldn't you just have a fucking buy limit down here? Based on this wick, and look, you could even have a stop here, like one of these, like, we'll have a stop at the lowest low, right? But you have to have the cluster of fucking orders here. You're placing buy stops here, or you're buying every 5 minutes it drops, right? You need to buy low to sell high. And this is without regard to trend. The trend's constantly changing on the 5-minute chart. So you're just a trader. You're a trend trader when you need to be. If you call this a trend, right? Is this a trend? Yeah. If you put this on the daily chart, you can't even fucking see that move. Look at this. You see that? Okay, you see this move here? How could you have gotten in that? Like, this is a half hour. So here you would have placed your order here. You know this high exists. This is what's so funny, is that people want to overcomplicate this shit. You have a sell limit here. You have a sell limit at the new high. You have to sell new highs. Even if you sold this new high here, you see the new high you sold, you made a little bit of money. Maybe they blew you out, but you're not trading just one ticket. You're trading a spectrum of orders, distribution of risk. Size distribution is what's going to make it so that you don't have, like, the market's going to fill you as need be, and you're going to get more fills. See, if you were to try to trade this, if you put a buy stop and a sell stop here, non-directional trading, what if your trade plan is like, I'm just going to bracket every half hour that goes by. Here you would have taken way more risk than if you would have babysat the 15 and placed sell stops up in here, or like the ATR is so small here at this point that you would have gotten filled. This is just mechanical trading, right? Sell stops, very low ATR. This is the ATR. You don't have ATR at the bottom of your screen, 14 period. What the fuck is that about? Jesus Christ, people. I can't even fucking believe it. In fact, the first trading book I read, I was like, MACD, I thought, what a filter. This is like running, anybody do audio work, it's like running like limiters so hard that these fucking. I saw this guy somebody brought in this CD, and they put it in the CD player, and the meters in the CD player never moved. They were just locked limit. They were sitting there at I think they were just below 3 dB, and they never moved. And this thing's slamming your head to pieces. This is when people got really, I don't know, maybe they've been compressing stuff for years, but holy God, So, yeah, if you were trying to, not that it ruins the music, but it's the window, that filter, or it's like taking a notch filter in audio and just saying, well, I'm just going to just listen to this one frequency in isolation. Well, how can you hear the music, right? If you put too many filters in here, and this price action, I'm a price action trader. There's a guy, this bozo from, God, can't remember this guy's name. But he's talking about, he's got this course. I love this price, right? How much is this monthly course? It's not $200. I love those ads on TV. It's not $200. It's not $100. But wait, you also get, so you get $197. This is like some fucking Walmart pricing theory. Well, psychologically, we've tested a group of people, and they don't think that's like well under $200. Yeah, it's $3 less than, and it's like mastering price action. Oh my God. To watch this guy talk about trading, I mean, is every trader that comes to trading a fucking kindergartner? I mean, nobody would explain. Would people explain driving a car? I want to do a video about taking the metaphor of teaching somebody how to drive a car, like teaching somebody how to trade. That'd be hysterical, right? Because, well, see, I'm going right now. See, when I turn the wheel right, we go right, and when I see the top of the wheel as it goes, okay. Now we're coming up on a red light. This is like a signal. we're gonna stop it, but see, then the analogy falls apart because trading, you're gonna drive through that red light, right? You just stole the car, and you can see when they rape these markets, like it goes this way, goes that way, and having a trade plan for the look at the spread here, so you can really see the spread just constantly changing when you're looking at this view. And there's a lot of views, like here's a filter right here. Would you trade that market? What the fuck? I mean, when you look at it like this, you're like, what? How do you get in and out of this thing and make money? Well, once you figure it's really just about price. Here's another big distortion of reality. So a zoomed out 15-minute chart. I'm gonna put some buy stops in here. So we're at the middle. We're in the middle of the fair value on this chart. You just change your whole view of reality by looking at this much data. Now, obviously, this is resistance, and that was they just nicked that, right? No buyers came in. And that was it. That's the entry. You're selling resistance. Now, it's just too simple for people to appreciate. And you just made 20 pips if you got out here. But we're back in the middle of the road. This is fair value. This is the contention point. Now, I realize there's probably, some amazing patterns in here, but it's about this bottom becoming a top, continuing down. But it's really about price in the end. If you compress this whole chart like market profile compresses, they're looking down the chart. All it is prices. So did it matter whether or not if you placed buy limit grids down here, does this pattern matter about that fill? No, it has nothing to do. It's just price. You're the one seeing the patterns. The market only sees price. The market cannot see a moving average. It doesn't think about it. It's not, doesn't matter, right? And it's like, well, that stuff really, people say, well, that really works. Okay. But how big would you trade on something that, if it really, really, really works, you trade really, really, really big, right? So nothing works. Okay, it works, but it only works with the right stop. distance and the right take profit, because it may work, but only for a little bit. And did you get the fuck out with your baby take profit on that thing? So it's all about having a playbook of many tickets and many styles, because you can't, like, if you just played nothing but slam rock, how many gigs are you going to get, right? You're so niched out. You cannot survive the market. If the market is just everything that's out there, you can't go into the music business now and just be, well, I just do hip hop, or I just do, like, really? Okay. We can book you one day a year, right? Like, unless you're established, like your Picasso, like your Fleetwood Mac, you can't just start a new gig and go out. I don't care how talented you are. People are just, there was this girl that was so talented here locally, and I heard her tape, and I asked my buddy, hey, can you get me a copy of that? That's just unfucking believable. And I never heard it on the radio. And he goes, hey, you want to go shop this thing, right? You want to go find some? I go, I thought it was the most tender stuff I've ever heard, but you know what? You're never going to hear it. So yeah, there's all sorts of amazing stuff out there, and it's just everything that's available. Those little, now this girl that was doing the song, what's her flexibility of survival, right? She does a hit song. Can she do it again? Can she rinse her brain and start over with beginner's mind and do it again? Like, even if you made a bunch of money on one trade, now the fear is, God, can I do that again? Or was I just lucky? And it's, but you did do it, right? The thing is you took the action and you did it. So that wouldn't matter. It would be more like, the opportunity exists. And so you're taking advantage of the opportunity here. I'm going to put some buy limits down here beneath this. Oops. I just tried to delete that. So here's a concept. We're going to buy down here. And we're going to get out. We're going to buy low and we're going to sell when it comes back up. Or are we going to put buy stops above as it's dropping to get picked up in the stream? Or are we going to buy right here at the market, right at support? So this is support, and this is always the big thing. Is this a breakout or is this a fake out? It's probably going to crash, right? I mean, look at it. Look at the weekly. I mean, look at the daily, right? Oh, here's a British pound. If you look at the, look, it's up here, right? But it doesn't mean it can't keep going higher. And well, how long are you going to be in this market? Are you just trying to scalp it? You could make so much money in the morning here on all these fantastical sweeping moves that it's just not going to matter, right? It's really not going to matter. You just want to make money, right? Now, if you make it $3, you make 30 pips, and you make what you make, but you have to repeat this over and over again. So if you to a professional trader, as people call it, they say, well, a professional trader means you do it as a profession. But it's okay to do it on a just a regular basis, to see that if you strip out all the, okay, you could put a moving average on there. I just don't suggest it, because the problem there is that if it does work, you're going to get a false sense of security. It's not the moving average that's making you money. It's the fact that you executed the trade. All this analysis is just so overdone. It just reminds me of going to college for 8 years and learning nothing. Because when you get to the real world, I mean, you can go to college. I'm going to guarantee you that everything's idealized. Everything is theoretical. And you step into the real world and you find out that, wow, that market's very volatile. And, that's, if it scares you that the market's moving really fast and hard during the news, now you don't trade the news, why not? Why wouldn't you trade the news? Most people would say you don't trade the news because, well, you could really get hurt. Why? Because you're trading too big. So if you're trading small during the news and you're trading big during Asia, then see, here's Asia on the British pound. Right here is Asian session. So what if you have buy limits sitting here and that's your trade and you scalp back to fair value and that's it, right? And the news comes out, market's ripping around, and you're putting in a buy limit here and a buy limit here and a buy limit here. And you're going to trade wider and smaller during the news. Why wouldn't you trade that? So it's like these guys, one guy showed up to, well, you'd ask kids, hey, kid wants to play guitar. And so this one kid was like, well, I want to play lead guitar, right? Because that's the coolest thing to do. I said, well, if you don't play rhythm guitar, you're not going to know how to play lead guitar because you don't know where to put your licks, you don't know where to play. So if you want to say lead guitar is like scalping some big position, but if you don't have the rhythm, if you don't feel the rhythm of up, down, up, down, up, down, how can you take a solo, right? How can you sell here, buy here, and trade, high frequency trading up and down if you don't know the bandwidth, right? The frequency range. So the frequency range is 20 pips. It's vibrating in a frequency of 20 pips. If I put a bunch of orders in here that start at this new low, I put a basket in here and it's going to scalp to here, and the stops are in a bank down here like this. That's a great trade, right? And if it fills every ticket in this buy limit bank here, here's a stop that's kind of a soft stop connected to all these, and it starts taking profits all the way to here, right? This is kind of what the ideal situation is. Market swoops down, fills here, fills there, comes back, takes profits, trades over. End of story. Now, if this is like, this could be a $10 trade or this could be $1,000 depending on how you load all those tickets. But the nice thing about these markets is they're letting you put in these orders at a 100th of a pip, and you're able to get a high resolution trade. That's what I'm trying to do, is high granularity incremental entry and exit. Because that's all that's going to matter. And you're going to be a seller when it comes up. Also, it doesn't matter whether you're buying or selling because you still need to be on the other side of that to get out. The market just needs to move in your direction. But if you're buying, I don't know if I bought enough down here, if they stop me out. If you're selling, you need to have it go down, and when you think, hey, I'd buy here, this looks like a good buy, you probably got to get out of your sell. Let your profits run is the dumbest shit I ever heard in my life. The dumbest. You can't let them run. You need to have an exit. Oh, but what if it keeps... So that's why you're trading more than one ticket, because you have a let your profits run. Okay, maybe it's not the dumbest thing I ever heard, but it's dumb if it's all alone by itself. Like, you can't live your life with one rule set. Monolithic is dangerous. All or nothing's dangerous. Oh, only trade 50K. It's just not worth it to trade like a smaller... Really? Holy shit. And this is another thing, is that how big, right? How loud? If you're not good at playing drums, do you really want to show up and just start banging on drums? Every time I've ever played drums, I'm playing really lightly because I think I suck, right? I wouldn't really crank. I wouldn't start banging on unless I was fucking amazing. Like, I don't want to annoy people, well, unless I'm doing a video here, but I don't want to annoy people because I'm like, so the people pleaser, right? All this stuff that's going to come up in your feelings when you're trading, and then what to do about it. And say you've lost all day, so you finally make a winner and you get out. You're like, okay. And they see you just go screaming in your direction after that entry. That's okay. I mean, it's really the seriousness that is put on trading with this kind of like, well, let's see here now. So and then I love when people do the preamble to their presentation. Well, I've studied at the University of MIT, and I've traded for 5 banks, and I've... yeah, but so how does it... That's wonderful. But I would love a guy... I went to... Alexander Elder had a course in Chicago, so I go there, and he actually live traded with an overhead projector. This is a high-tech, right? Laptop coming out to a screen that fits on top of an overhead projector. This is like a long time ago. And so he's trading the Chicago Board of Trade, trading the bond market. And he got out of the trade. Now, mind you, it cost $30 round trip on this trade. He bailed on the trade. He goes, you know what? I don't like it. And then he says to the class, hey, if you don't like it, get the fuck out. Now, for some people, if you're stubborn, or if you're like, no, I'm going to see what happens, right there you're at the turning point. Right there you're at the crux of the issue of trading. Do I hold this trade and see what happens? Stick with my trade plan, and because I had a good breakfast. That's the funniest thing is watching this. Somebody posted a bunch of empowered trading videos, and Stapleton's first video was his trade plan. One of the elements of his trade plan was a good breakfast. And I thought, God, I mean, couldn't you just put like part of my trade plan is a really high-end hooker, the kind you can take to the cocktail party. So, yeah, I don't, all these things that people need. Paul Tudor Jones had his favorite tennis shoes. I can't find the video on YouTube of him where he's sitting and he's just looking at the prices and he's trading, but he's got his lucky tennis shoes on. Yeah, sure, if that works for you. And that's the thing is that whatever works, right? And the trade rooms, if there's somebody you don't like in a trade room, say, and you're like, well, I'm going to trade against that guy, and like the trade's about this guy, not about you making money. And another thing about trading that's terrible is that it's about making money. So it should just be about execution, right? Like if you're playing scales on your guitar, it's like, how clean is your scale? Or maybe you want it to be sloppy. How clean is your scale? Like, that's the thing. It's not about, you're not writing a song. Well, I guess you could write a song out of practicing scales, but you're really just executing. Getting it so that you don't have to think about it, so that when you have an idea, you could just fucking blurt it out in a melody. Because you're just like, well, fuck. It kind of goes like this, I mean, you can express yourself. So you have to express yourself trading. This is what I think is going to happen, or this is what I think is a good idea, and you're going to execute that trade. So that's your own personal choice and idea being executed. You can see, when you see people do a video, and once you look under the hood and you ask yourself, well, why are they approaching the market like this? Why are they even approaching it like this? Then you start to get a clue is that they found a need to make it safe for them to trade, to make it so it's okay with all these filters. Right? So if you have a checklist And then you'll see this consensus thing. Well, this all comes together and I'm going to get in here. Okay, that's great, but what are you going to do in the meantime? Those are very rare situations. Like, look at this British pound. Like, if you look at the British pound on the weekly, on the weekly, let's zoom in. It's too brutal. Like, is that it? No. Fuck, here it is, a monthly. Look at this monthly. Would you wait? How long would you wait for this setup? Now, granted, this is a killer. Where a bottom becomes a top. And the reason why that is because anybody that bought here thinking, well, it's just going to, this is a 1, 2, wave 3. When it comes back to here, and this is people that don't trade with stops, like banks and all that shit. As soon as it comes back to here, their books are going to tell them, okay, let's go flat. We're going to go break even. Get the fuck out. And there's obviously, this is the huge rollover, but this setup just rarely happens. It happens on the 15-minute chart, but not. You're waiting forever for that trade, right? Look at this wick. Jesus. So I don't know if that helps, but the thing is that you're looking in the mirror. When you look at these markets, you're looking in the mirror. Like Australian dollar, right? Is there a trade for this stuff? For me, there's always a trade. It's called buy low, sell high. So I just hit this button. I don't even fucking care. I would buy down there on a pullback, right? Makes sense. It's going to buy 1Ks spread out, different prices. Now, how long does that order last? That's another thing. If that lasts all day, that may not be the best trade. If it lasts for half an hour and the news is about to come out, that might be pure genius. It's really experimental. The nice thing about trading is always in an experimental situation. I'm always experimenting. You have your go-to trades, but you need to play a scale that you just made up. It may not sound good. At first, it may not sound good. You think, oh, this scale just sounds ridiculous. But of course, just like anything else, you would just get used to it, and you could build off that possibly. But it is a real daunting task to, here, I got a sell limit. So I put sell limits up here, just a crop. Now this is a progressive order where the size gets bigger. I sell more the higher it goes. And the stops are pretty much hard on that. Here's the next ticket to sell. I think this is 15 minutes and a half hour. So I published, I put stuff on high tails, but really it comes down to you is like, who's not going to sell this when it goes up here? Australian dollar, right? How is that not a good sell? It's fantastic, right? So if you think it's going to go up there, should you buy it here for a ride up into that? I don't really like getting in on that trend here. This isn't an uptrend, right? But we're up against this. Sellers should be coming in here. Here's the top inside the bottom. Top revisits on the wick. You see this a million times. Always want to have your sell limits up here. Here's the trap. That ICT guy goes off on this trap trade. It's hysterical. He thinks that there's some magic to that, like he needs to do a bunch of analysis. How hard is it to see this wick here? This window, now this would be like a Gartley entry, right? This is what these Gartley people are talking about. Because you're trying to capture this. Now, I would put a crop of sell limits up here. Even a sell limit right here at the shoulder. If this is the head and this is the shoulder, right? And that's killer, right? You're going to take profits as soon as you come back to this. You start taking profits here, you take profits here, take profits. Now let your profits run. Yeah, but how did you not take something off, because you could have also added to this position, at which point this bottom becomes the top. You see this over and over again. It even kind of almost nicks this wick. But I'm selling aggressive. I'm selling every new high as it goes up into possibly even to here. It doesn't make it. It makes it into the bottom of that wick. And certainly on the 5-minute chart, there's a bottom here in closing. Here's the doji. See a flat spot? Doji. This whole is just... So the market breaks out, comes back to the breakout point. It does it twice, though. See, the problem there is that when people say, well, look, and see what you do is when, I'm sure people have seen this video, right? The guy says, well, what we're going to do is here, see, as soon as this breaks out, we're not going to jump on here with a sell stop. We're going to wait till it comes back to the breakout point. We don't want to sell here, and then we sell here with a stop here. Okay, how'd that work out for you? They fucked you. Because you can't just trade one ticket. You need to put in many orders. So you're going to buy here at the top of this. These are, I'm hitting buttons that throw out double click orders. So it's really not very precise. I'm just shotgunning this thing. But if I was a hand placing order, I'd buy it here. I'd buy here. I'd buy here. I'd buy here. Right, because this is where the stops are. There's going to be fuel to pick up. Those cells are going to create an order imbalance, and there'll be buys. So when you have people have the protection here, the bears say, well, I'm going to put my sell stop up there, and then if they didn't buy this triple bottom, as it comes up here, it nicks that order, but see how it pulls back? So it nicks that stop. You can see where everybody's stops are, right? Right now, the bull stops are sitting here and here, and the bear stops are sitting here. So you want to sell here. For some kind of scalp back to, say, here or here, you definitely want to put a sell here and a sell here. This is the next thing to come. These aren't put exactly, so I'm just selling this whole area. And if this size is not going to make it so you have to get rid of your family, then it's not going to matter to you. This is clipped. The scalpers are making money by putting sell limits here, or they're selling at the market babysitting, and then they're going to dump here and cover here where this comes back into the top on the 1 hour. There's a million trades in here. Well, not a million. Might be exaggerating. $1 million in here. If you know this low exists, why aren't you putting a buy limit there? And you'd had 1, 2, 3 entries. You could either have built a position here by constantly buying at that feeding line in anticipation of a run to here. So all you're looking to do is, and you can also have a buy limit here. You know this is a new low. You could have had a buy limit gridded in here this morning well in advance of this plunge. Who can't see this plunge coming? And maybe you're selling on stops here, the breakout. Maybe you're short going into that. You're short going in and you're going to get long as it comes down in. And if you were to had bought here, you're above water on that trade. If you held through this whole swing and you've got, this is 20 pips from here to here, and you made 20, 25 pips on that. I'm sorry, this is yesterday's smash down, which is just a big trap, right? a big kind of, but it's not a trap. It's a trap. They call it a trap trade because it's for people that sell on breakouts, thinking this is a continuation, and they get fucked. They get banged. See now here, sellers should come in, but if they don't, we're gonna go shearing straight up. Possibly, everything's possible. So I'm not going to say, well, I should have bought there. Look, it's going up. I'm selling up into that. And if I was long, would I be getting out along the way? And you should be getting out of something right here because this is the critical fulcrum of this whole situation. So if you zoom out, so in the big picture, and of course people have this view of the market, which is so ridiculous, right? Well, I'm waiting for this to go to here before I get long. Well, okay. But obviously here on the 1 hour chart compressed, this is a 20 pip volley. This is totally tradable. Buy, sell, buy, sell. Okay, it breaks out. Is that going to run forever? No, what's happening is it's coming up to this 20 pip vault. And this is completely square. At this zoom rate, you have a complete 20 pips per day. Rate of change is 20 pips per day through here. This is dropping much faster than that. Here, obviously, huge buy window. You're buying, you just gobble that up. Here too, buy this thing. You've got a decent bounce here. If you just buy new lows every day, it's how big you get into that trade, really. I think. I'm just saying. I think it's how big you get in. So, size is the critical factor. The, let's see, am I back at the right screen here? Gotta get drawing mode here. And this could engulf the whole week. This is Sunday night here, these double. Since this broker is trading, it's trading Sunday night, so they actually have 6 trading days here. This is Sunday's prices. So here, you can draw a trend line here, right? And you can wait for the break and all that stuff. But don't you really want to be selling up in here? Why don't you just trade price? Yeah, you can do all that shit. You can put all that technical analysis. Look, it crossed over. I went long here, and look, yeah, okay, you're doing great, right? I got in here, yeah. I put a sell stop here. I wrote that down. Man, this trading works. I love this trading. But have the different stuff available, right? To have this repertoire, right? You need to have a vocabulary. You can't just have one word. You can't just grunt. That's all I'm saying. You need to have diversification of entry style, of sizing, of targets, of stops, of time frame. The 5-minute chart is just so easy to see and just trade on a demo and just learn. You just trade the shit out of the demo, and you know, I guess you could approach it. You know, you can have a demo that you abuse and demo that you're like gonna, treat like real money. But who's gonna get an inflatable doll and not molest it, right? Like a demo is really, in essence, like it's just a surrogate account. It's something you can test out theories, right? And these serial killers, why couldn't these people have like fake androids to torture, right? The cure for the BTK killer. Give him something he can torture that's almost like a pacifier, right? But yeah, I don't know if that helps. I mean, it's definitely, I would say, yeah, I like this one guy's advice. Just put on a trade and see how you feel, because that's going to be the thing that's going to be the ultimate answer. And you have to be okay with losing, or you couldn't be okay with winning. So you'd have to be okay with so-called risk. You'd have to be okay with And being right or wrong, you set yourself up for failure when you decide, well, I'm going to trade with the trend. Because without a weight, it's like I could have got on this uptrend here, right? This thing was going up. But what would I just, isn't it, so I just got filled on this one sell limit up here. Put some more sell limits on. So why wouldn't I just sell if I think the trend's going up? How long is it going to go up? So this is the if-then statement. If it's going up, how far will it go up? Is it too late to buy? In trend trading, the question is it, okay, well, the trend's been going on for how much further can it go? How long is this trend going to go on? Is it really in a trend, or is it just filling a hole? If you look at this dollar yen. Now, what is it really doing? Is it filling a hole, or is it in a trend? Is it filling a price vacuum? I think it's filling a price vacuum that looks like a trend. So how do you know what you're really seeing? If this is the void that needs to be filled, then what, we're on an uptrend? Or are we just filling this hole? Here's the void. Is it in a downtrend, or is it just filling this hole? And when it's done filling it, and it's satisfied, it comes back to the previous support level here. Is this a trend continuation? Or is there a hole that's been formed here and there's still more hole, that sounds bad, to be filled? All right, because those are the hookers come in. So are we creating a void here to be filled? And are we done filling to here and all the way back to this 100-yard line? How quickly will this hole fill? Or are we going to keep going up? Because there's still more void. And the right here would be, well, I'm going to sell here. We're going to wait till it gets up there and sell. I can't do that. I cannot wait. So if you're sitting at home in pajamas and you're trying to trade, you're going to go to the 5-minute chart and you'll be like, holy shit. I bought here, I sold here, bought here, sold here, I sold here at this trap on the double topper. I just had sell limits up there and I got in here and I'm just a range trader. I don't care where the fuck it's going. I just made 20 pips. Who cares? And the biggest, and here, look at this trend here from yesterday. And feast your eyes upon this thing. I mean, here's a perfect trend. 5 minute, you got to be on this 5-minute chart though. So double bottom at the 20-yard line. Top doesn't even become a bottom. This thing goes screaming up, right? You're getting in. When I started out the video, I was talking about putting buy stops in here. You can't see it, but you'd have buy stops trailing. If you're going to go with the trend, this is 1 day move up. The very first top that becomes a bottom down here. Then we break this. It doesn't even look back. It's screaming because it's filling a hole. Here's a doji. Put on buy stops and sell stops here. Probably the best trade of the day from just a low ATR static entry. You could put buy stops and sell stops. Maybe it is going to come back. If you put a buy stop and a sell stop right here, right now, you're off the hook psychologically from deciding. Let the market decide, right? If it goes down, okay. And hopefully you've got your take profits that start coming in here. But what about this big hole? Could we fill that today? Yeah. So having a sea of orders down here, and maybe you're long. So if you're long here and you're in, say, 10% of your account or something, whatever it is, and here you got another 10% donated to this thing. Even if you bought here for this burst, this is a very short, this is 5-minute chart. It's a very short-lived trend. I sound like that guy from, that creepy guy. Who's that guy? Oh my God, those people cracking me up with those videos. Never made it back to this. Almost, right? But see, here's all this. You would just fill this big hole and mission completed, right? Then the whole time that's screaming up, it's the seller's dream to come in here, and it's the buyer's dream to buy this. If you waited through this whole drama here, you bought this double bottom. There's the top become the bottom. It flags out or it goes sideways. You're holding on. You're like, oh, I'm long from here. Maybe you scalp to here. The wise thing to do. See why Fibonacci sucks compared to the 20-yard line. Look, a top becomes a bottom at the 20-yard line. Constant bickering back and forth. And, God, there's so much money in these markets, man. Why would you? I'm going to different currency pairs to show you it's all the same wherever you go. So you would just trade one currency, right? Just trade the shit out of one currency, because why would you? Like, you're looking for the tightest spread, of course, too. Spread's super tight here. 0 pips right now on this thing. See, 1 minute chart. Look at sideways. Here's that flag. There's the 1 minute chart. When people say, I can't trade the 1 minute chart. Yeah, they're looking for fucking, well, I'm looking for a bullish engulf on the, or I'm looking for a hammer. I'm looking at, oh my God, are you kidding? Like, you're just looking for the hole to fill. Here, put a rectangle in. Right here is where all your buy limits are sitting. And you just made money on that trade. You're up. You're gone. You scalped it. You're done. Now you can let some of that run, but you can see where the sellers are going to come in. The last known low, right there. And your sell limits are going to start here, and if it's not your sell limits, these are your take profits. You're going to take profits here, here, here. And maybe it does go shearing up through the thing. But it doesn't, if you made enough money, at least even here, this is important law. These are all these prices are important. And here's the infamous 20. Look at this wick into the 20. Ba-bam. And that's a real pip number. That's not a Fibonacci 618 garbage. It means something financially. So I think the banks are trading prices. So attributing technical analysis to your successes is just silly, because it's really about, and if you're trying to make money, it's about how big you're trading. If you're trying to, because anybody knows with a 30%, being right 30% of the time, you can make a lot of money. Because once you tighten your stop up to like 5 pips, 8 pips, 12 pips, you're going to be wrong. Technically, that's a losing trade. And if you're looking to make 20, 30, 40, 50 pips, if you trade the fuck out of that, and I've done it where you're like your win rate's 30%, but you're killing it. Your win rate is going to go down once you tighten your stops. And what I said at the beginning was, if you run a 100 pip stop to make 5 pips, your win rate's going to go up, but you're exposing yourself to an immense amount of punishment. So there's 2 trades, really. You're either breakout trading, waiting for the market to get quiet, and you're going to put on a trade with that tight stop. And maybe you're going to put a buy stop with a kind of a tight stop. And you have all these different levels of stops. So having the spectrum of stops, spectrum of take profits, that's where I think people should focus, instead of focusing on, what do they say, a strategy. Because then that becomes a strategy. And the thing is, so if you're going to just throw maybe random orders out there, how far away from current price are they? Limits typically, because it would be idea is a retracement entry. So I would never put I'd never put a buy stop up here. It would make sense to me, even though it might make money. If I put a buy stop here with a take profit here, I'd be like, oh, well, I'm going to keep going in. But I'd rather donate most of my money to buying this whole vestibule, this foyer down here. I'd rather get into this whole thing, because this to me is high probability that even you're selling here, you would say, well, I can't believe you sold up there. If you sell in the right spacing and sizing, even this sell here is eventually a winner. And if this sell is targeted at this top, so we fill this void, right? This void's forming, we explode up in, you're selling into this void, back down, and you have a take profit, say, from all these tickets, take profit is to here, and amazingly this is carried across to that. So if you needed a fib tool to give you an entry, I understand, because you're like, well, there's a 618, okay, to put an order down here, but you just put, these people are putting in one fucking order. Are you kidding me? Are you kidding me? Right? So you own a restaurant and you have one thing on the menu. Well, our food is so good. I like when they have the chef, you know, like you can ask if you want to be one of these people that go to the restaurant and think you own it, right? You go in there, you say, well, what does the chef recommend? Probably whatever he's got too much of, right? Now, what does the chef recommend? And all this stuff. I don't know if that helps. But it's funny because there's so many wackadoodle analogies to trading. I call this a lifeboat trade here. Like, this is my last hope to make all the money back. So there's a lot of psychological energy that goes into trading. But that's a choice that you make to invest the feeling of being right and wrong. And you can be very right about something, and it can work against you because you know, to replicate that perfect trade, I just don't think it's if you set out to write a hit song, right, you probably would have a hard time doing that. Whereas if you just wrote a bunch of songs, one of those songs may be a hit. So that's kind of like the trading thing. And it's okay to, but I just think it's better to have a flexible approach. Be okay to buy and sell. I put some sells up here at this top of this wick here. So I think the last thing I put on that high tail was these, so here I'm going to risk, I have one here that's risk 20 pips to make 10 pips. Now this is a higher probability win if I sell here with a profit here at the 20-yard line, because of the fact that also if I sell here, because I'm giving the market plenty of room. I could always tighten that up later, right? Here's a place we could revisit. So all these are possible. If all you're going to do is take an order and drop it here, how much energy does that take? Here I'm buying 2 pips apart. So I'm qualifying as having a diversified price entry. Here I'm going to trade every pip for 4 pips, 4K spread across a 3 pip box. I'll buy here, risk 20 to make 10. Higher probability of win, same thing here. And same thing at the top of that. Got 8 hours to get there. On the top side, I'm going to sell at the 100-yard line. Risk 20 to make 10. See how much realistic this looks? Look how realistic this trade is. And I'm trading 4K spread. Right? So we come up into this capture range right at the round handle. Now when I originally dropped that, it looks like you're right at the round number, but you're actually not. And these 5 decimal brokers, it's amazing. Here, I would sell right there and above, overlapping there a little bit. We're still down here. We could still sell. If I wanted to put 20 pip icebergs in, it would look like this. And these are all bad ratios. Bad ratios, high probability. So there's a balancing act there. Here is the buy with bad ratios. Here. Buy all the way to here. Wouldn't that be amazing? Big slam back here. Here it was beautiful. Here a guaranteed win. See the probability of this? I'm putting a buy limit here. Just like I did with a 4. Every pip for 4 pips with a 20 pip stop. Your stop's like this. And you're looking to make 10 pips. And you totally made that. Totally. And same thing here. Your sell limit here, every pip for 4 pips with a 20 pip stop to make 10 pips. Yeah. If you put both of these orders in, you would say that this is almost a break even at the end of the day. If they both fill, you're going to risk 10 pips to make 20 pips here, though. This is already greedier order. If I place those up here, too, it's at a slightly different price. You don't want to pick the same price, because then you got too much duplication, and it becomes unstable. This is why you have honeycombs and have these many sides. So the dollar yen's still in an uptrend, right? Supposedly. But where's the turnbuckle? Right? Where are they going to turn it up here? And where's the place to buy the retest is down here. And do I cash out right now? I'll go flat. Flat's beautiful. Especially with these many orders pending. Here's the British pound. This is where I started this thing, British pound. Let's see how it's doing. Okay, British pound's just treading water, but see, this was the scalp. We bought down here, we dumped here possibly. I'm not even sure if that got out. Actually, that was that broker. This is this one. Here it is. Dollar yen entry down here. They all look the same too. All these currencies look the same. See here, I'm long. This is the one. So I'll cash out, right? I'm not up very big, but it doesn't matter because I see I have to sell here. That's another thing. If you're waiting for this big target to get hit, you're just gonna get smacked. You have to see when it's time to get out. Targets aren't being met. Take what you can and run. You can always get back in. Look how easy it is to get back in. I just put random buy limits down here at support. I'll get in even deeper, right? I'll buy a bunch of orders way down here in the outskirts of town. It's like a real estate deal. You're not going to buy prime real estate. You're going to buy a fucked up place and you're going to fix it up. You can buy outskirts of town here. I can put one buy stop in there. The 5 minute, if I'm going to ride the price, here's a big trend starting. Anyways, hope that helps. It's really about how you feel when you're in a trade. And what it should be uncomfortable. I guess the comfort level of trading comes from accepting the risk. Once you accept the risk up front mathematically, there is no, they say if you buy a car, A new car, as soon as you drive it off the lot, it loses 20% or 10% of its value. I think that's very funny. It's funny from the standpoint of that people put such a value on brand spanking new as opposed to just lightly used. And they even have a scent called the new car smell, which I think is funny. It's all funny because it's psychological, and the thing is that is it really? Maybe you got a defective brand new car, and the other guy got a used car that's like it's unbelievable, still running. So the new car thing, and that's the gonna get a new start, got a new car. It's a feeling, right? So it's like people go to the movies and stand in line to see when the movie first comes out because they want that feeling. So you're trading for the feeling and the comfort level. So they would say, well, you do mind buying a used car? And people say, oh, well, of course, I don't know how used it is. People would say, well, you're buying other people's problems. You're buying something that can break down. What makes you think your new car can't break down? Well, I got a warranty. Okay, so that's like putting in a stop. This is like, having a warranty means you're going to spend money on the warranty. So this is like trading with a wider stop or confirmation. But I think you can't just take all this stuff and try to make it. You can't treat trading like, well, this should be. I should get a system and just stick to it. And maybe that does work. I don't know. I'm still waiting to see the guy that's. It's like you see the people do the video. They would say, "Oh, you make a set of rules, but then you got to know when to break the rules." Well, that just means that apparently they able to just see opportunity without rules. Like I don't think in the children, I just think children can out-trade an adult only because adults are brainwashed with a bunch of carefulness. You don't want to be that careful when you're trading. It shouldn't be hard-earned money. And is the money that you make trading hard-earned money? That's funny because is that easy earned money? I thought it was because I thought, well, I'm just clicking a button. I'm making money just clicking a button. But I guess the focus or the concern that creates an emotional situation, the concern, it can be expensive, can be physically demanding and stressful because some guy put a comment in that empowered trading thing. He said, I didn't know if it was a joke, but he said that his family had left him and all this stuff. He was trying to make money trading, and I can understand that trading attracts people that figure, well, this is where the money's at, and there certainly is. There's bank balances in front of you there, but it's just not a normal job. It's just not a regular kind of thing. It's you're really running a business that involves inventory. And that's how I look at these tickets, as inventory. So somebody comes into the store, and if you're out of stock, that means that you don't have any orders in that price zone. You can't accommodate the customer, and you don't have enough money. Like I think Home Depot, when they opened up, they didn't have enough money to buy inventory, so they put empty boxes on the top shelf that people couldn't touch. And people walked in the stores, and they thought, "Oh my God, these guys are killing it. I feel safe to come in here. Look at all the orders. Look at all the volume." And that's another thing you'll hear in trading, like, well, there's big volume here on this bar. You can see who's controlling the market. Yeah, but you want to get in before the volume, right? If you're a breakout trader, you want to get in when it's quiet. When it gets loud, you get the fuck out, right? Because now they start swinging from the trees like morons, right? But yeah, Home Depot had fake boxes in there. And they told people later that on, this story came out later on, but if people would have known, oh my God, you got fake boxes? There's nothing in those boxes? You actually don't have enough money to buy inventory? Well, they were just starting out. Well, Home Depot might be only here where I live, but that's, like fake it till you can make it kind of thing. So here, I'm going to get out. I'm going to take profits here on this. Just as we're breaking out, British pound's about to break out here. And I'm going to get out because I figure I can get back in. So I'll put buy limits in here. I guess I didn't put them in tight enough. I don't know if I have a script for that. Here's where the devil's in the details. So do I have a order I can place to take advantage of that? I'll go here. This is as tight as I can get in, about right here, right? So would you rather buy at the market or 1 pip cheaper? That's my question. Here, let me go for a more precise. Here, all day long. I can buy right here. So I sold up there, which was just getting out of my lungs because of that trap right there. Now we're going to come in with the buy limits. So I'm just going to stack these up. So this is the way you should trade, just a little more precision. I do have the random orders. Well, not random, but I just have a fixed pip amount. Of course, here at the top of the hour is a big deal always in these markets. And here, this is like this. This is a 15 minutes. We're going to buy low. Big strategy there. Buy low, sell high. Go back to the pound. Now maybe I put a buy stop in, which is really a market order. I think I do have a market order here. No, it's not hooked up. Okay, so I'll put buy stops in. I'm anticipating a fill of this void to the north. This is not rocket science. So here's the big chasm. There's a void filling here, and this is void up here too. Past history. So here's the hole we're looking to fill. It goes back to there. And fair value right here is obvious place to put in orders, right in the middle of the road back down here. So you can literally place it there. You're going to drag and drop, put precision drag drop orders there. So there's a 3 tickets over a 12 pip range. Trying to make 50 pips on the ultimate breakout here. Trying to risk 15 to make 30. Risk 12 to make 28 in a 16 pip range. Looks like this. So I'm counting on this black swan that's going to go smashing down. All right, so we always want to buy low, sell high. My buy stops haven't filled, so I could put another buy stop in. I'm going to ratchet into the pullback there. Anticipating a move up. It is in an uptrend. So how do you get on this uptrend? You can either get in at the market and you're really looking for it to be down, so you buy every down. I think if you're trend trading, you're waiting for this move here. This is the 5-minute chart. It's down, you buy. And here's the doji. You buy. Or you have buy stops here. You could have a buy limit back here. Here you would buy because it just went down. You're buying because it went down. And when it's going up, you're selling. Sell here, sell here. Counter trend trading it. Because if you get the size right, Here we go. So we're looking to fill this hole. And once we fill that, there's also the fact that we could take out the high of the day. But you don't want to get too far ahead. Because right here, if you're mechanically trading this, your buy stops are sitting here like this. You're long because of a breakout on the 15. Buy stop, buy stop, buy stop. You finally get filled. You're long, you stop buying. Your only chance to buy again is here on a pullback or here on a limit across this, comes back here. And you buy that, pull back to here, continues, your double bottom. Here's doji, but all these new lows, right? You're buying these wicks down here in a basket of orders at different prices. Because if you have too many orders at the same price, you're kind of destroying the idea of spreading your risk. So you got to really spread the risk, spread the pain. Okay, here I'll buy this new low on the. This is some crazy script I think I wrote. Wait. Yeah, look at that. So I just keep having these, and so this super broad order, this buys 28 pips deep. So if the news came out, I'd buy from here all the way down. I put another buy stop in this 5-minute chart. So I can either put a buy stop in here or I can buy at the market. Because it's just pulled back, I want to get long. I think it's going to fill a hole to the north side. If it doesn't, it fills this hole, and then I can win here. If my stops are too far away, I'll be chasing. I'll get a bad fill. On the 15, you can still see the void. See, the 4-hour chart, how can you make a decision on that? Your decision here is to buy on limits down in this hole. Because you really can't see. There's no drama to this pullback. This pullback is really this big giant void here. All right, buy stops. Okay. So maybe there's news coming out at the bottom of the hour. You got 25 minutes, we could get a burst here, and that would be the scalp, and then it'd be over. Okay, let's just see what happens. So the news is coming out here on something, probably. And that's a minute, 2 minutes away. So British pound, still pulling back. Here's the 15-minute chart. So I took profits on that. This is also where the scalpers went short. They sold that new high. I mean, the winning traders did that. All right, see, they sold up there. You got 3 dojis in a row. So I'm going to buy on stops, and I'm going to buy on limits, both. Oh, got to delete the objects here so I can see what I'm doing. I think it's in here. Wait, no. It's okay. I got a key for that. Let's see, there's a keyboard here. So I can just delete the objects off of this. It's going to take me to the next chart. So we get back to this chart. Here we go. So I'm going to go long the pound. Looking to fill that void. And the news is coming out in 25 seconds. So it could be a hit or a miss. Let's see what happens. Spread should get big. Everybody's bracing, 10 seconds. Spreads typically get wide. Okay, here we go. 3 seconds. Kaboom. Right? Maybe it's going to be it's going to be like fireworks, right? Just fizzles. You look down the barrel, and the thing finally goes off in your face. Okay, huge buy limit fill here. Put more buy stops in. Buy low, sell high. I'm going to go for the hand-placed limits. Let's see, we'll buy with a 20 pip stop to make 50 pips. I'm just going to buy I want to buy a dense. So I just make the orders denser, which is really just trading bigger, is to put small orders close together here is a very tight pack of orders. This is in a 4 pip range. I'm going to buy 5 tickets. That is the 15-minute chart. So right here, fair value. Right there's where we want to get into this top. So if I don't think I'm in big enough, I'm going to buy at the market. Right here in the middle of fair value, right where it's fair. You can go either way, because at the center of the doji would be, oh, it can go either way from here. There's no, it's really unbiased entry. Whereas we know for certain that up here is unfair value. So if you sold at unfair value, this is also unfair value. And this here is the middle, the body of the candle, the doji. So this is your doji, and these are your wicks. You would only see, on the right time frame, you're only going to see pure wicks, and you're going to see what people think's noise and everything. You'll see that sideways action. So this is either accumulation in unfair to here too. This is the next target is here, and then you could expect people to bail there, because anybody that bought there expecting it to come up is going to have to go flat or balance their books. Okay, so here goes. Oh, we're in $63. $64 of margin here. So let me get in bigger on stops. And just let it go. I have a stop here that's kind of far away. I guess this is your confirmation entry. Is to place an order like this, say, pretty high up above. This is my highest buy stop. And then we just let that last a long time at this point, and then the rest of this I just hand place these 1 hours like this. 10 pip stops to make 20. Just overlay these. Here's where you can get really precise about the order placement, because order placement's really the big design issue. If I come in here with this and put another basket, now I'm covering an 8 pip range, and here I can cover a 12 pip range with the same ticket. So it's like if you're drawing, you can either go for a fatter pen, or you can just take a small pen and just scribble and put a bunch of small orders in. Because I have this diversification of risk is going to be the thing that lets you off the hook psychologically of fear of, plus as the orders fill, you're basically, if you're going to max out at this magical 2% risk, there's, you can set it so there's 30 increments before you get to 2%. Those increments, so you would never do a piece of, art like that where you just come in and, unless you do that art from the 60s where you just put a big dot on a canvas and go, look, what do you think of that? And then put an outrageous price on that. I always thought that was a great approach to marketing, was to create something that's so unique and so offensive, but then the price attracts the sophisticated, esoteric people. And they're like, oh yeah, look at that. And then it's like, they're like, well, that's interesting. And that's what they say about bad art. Well, that's very interesting. And then then they would say, you know, this at your cocktail party, hey, wow, how much? May I ask how much that cost? And like when you tell people how much you're bragging about how much you paid for this red dot painting, they're like, wow. And then they think, well, man, you must really see something in that painting because you spent so much money on it. Or are you just letting us know that you're so rich you can buy bad art? There's always that fork in the road. That's why I look at those Gartley things. It's kind of like, yeah, it's like, okay, that's all right. That's interesting. But man, I mean, you're just going to trade one ticket on that puppy. It's that good. Well, you should see this bat wing forming. Oh my God. It's like, yeah. The neighborhood I live in, I'm waiting for the hot chick down the street. It's like, oh God, she's about to get a divorce. Okay, they're coming into my trap here. They're coming into my limit trap. So I got buy stops trailing above. And I'm going to put a bunch of buy stops, a bunch of limits down there. Okay, so that was a nice sell-off in the British pound there. Nice kickback. The news has been out for 6 minutes. Everybody's digesting the news. Oh my God, what do we do? It's just order imbalance. This is the oldest thing in the world. Market profile, they talk about that, right? Order flow. It's about order. It's about fair and unfair values. That's all it is. Like foreclosures. If you bought 5 years ago, if you started buying houses, you're a genius, right? I think I said that in a video 5 years ago. I think I talked about real estate 2 years ago in my video. I said, buy houses. You're going to sit there and tell me, now this goes back to the old days, right? Location, right? They always say in real estate location. Well, it's always about price when it comes to trading. So who doesn't want to get that killer price? If only for 40 seconds. Painfully obvious stuff on a 15-minute chart. Painfully obvious. Okay. $70 of margin. That's pretty conservative. Let's try to get 100. So if we go up, I'm spreading my strategies. I'll put some shitty price continuation trades in there where, okay, buy stop here. If we keep going up, I'm going to buy more. Better just to buy at the market if you think it's going up. I mean, you should be able to, if you have a clue, like, oh, I think we're going up, well, buy one at the market, and then buy one on a stop above and buy one on a limit below. Split your ticket into 3 different entries because psychologically, the limit says, it could still pull back. The stop says, I want confirmation, and the market says, I'm so fucking smart. I know exactly where it's going right now, and I couldn't go down a pip lower. And every style of order says something about, I think it says what kind of, since it is an approach in itself, like how you approach an instrument, like because everybody's playing guitar and the one guy's using a guitar pick and the other guy's not. So what does that say? And of course you can hear when people play with a guitar pick on bass guitar. I don't know anybody's a musician, but they hear these. I'm like, wow, that's okay. It's definitely aggressive. But you can hear that. And what does it say? Does it mean that the guy that plays the guitar pick on bass is really angry? I think it does, right? I don't know. You can do a lot of slapping of the guitar and get pretty angry too. But buy limit says, hey, I'm waiting for the market to come to me. Buy a stop, I guess you're waiting for the market to come to you too, but you're looking for it to go through you. I'm always thinking that that's going to be the follow-through continuation. And the market order says, oh no, I'm going to ride it. I'm getting on right now. And if that's on the clock, so if every 15 minutes I buy the British pound, to me that's completely acceptable way to trade at the market. is, oh, it's noon, like that's like drinking, right? It's 5 o'clock somewhere. Well, every hour you could just get in like a drunken sailor with a set stop. Just that one ticket and just continually hit that button. And you may find that that's, this is like certainly better than lottery tickets. I mean, these poor bastards buying lottery tickets, I'm like, you're kidding, right? You really are going to just blow $20 and scratch everything off to see if you won. Wow. Of course, trading's definitely, you need a trading, you need a computer and all that. I get it, right? You walk in, you buy a lottery ticket. How much hardware do you need to buy a lottery ticket? So you got me there. Definitely the trading thing is a technical, when people say technical trading, how about it's just technical just to have a computer as a drama? Back when they've gotten better, but this is EA, I can't even imagine. It's bad enough I'm trading this shit. Bad enough that I'm working on a computer. Gotta get those blue glasses so I don't lose my eyes. That's a new thing, right? You're gonna go blind trading. Gotta get those blue filter, specially formulated for computer trading. Yeah. So I don't know. Now we gotta wait for the stocks to open. And so that'll be the next thing. The next, but this is fair value. We're sitting right here in the middle of the road. If we're going up, this is just nothing but a place to gobble up some orders to go along. So here I'm going to put some more buy stops in. I don't have any buy the market keys on this. Plus I have just way more, I'd say 75% of my orders are limits below. Looking for that plunge-orama. You gotta love that. It's a classic. Look how hard that market moves. Okay, there's a half hour. Still waiting for the, now we might fill the void on the bottom side. So which void is more pressing? Is this the vacuum to fill? Now I'd put a basket of buy limits down here. Or is this still the next void to fill? So you have two voids forming. If I was now running risk to reward ratios of a risk 2 to make 8 on every ticket, you're going to pay more in commissions and spread, maybe. Got to keep that in mind too, right? So there's a bunch of side issues, right? If you owned a business in the real world, the bean counters would come in and say, well, if you just ordered like 100 of these on one pallet instead of ordering one at a time. So just going a la carte. If you have everything on a separate thing, then maybe that's a metric that's cutting into your profits. But how much attention are people paying to what they're, how many aspects are you going to nitpick in your trading? And so those are all considerations. So I have a close all open and pending order ticket here I could hit. I could just wipe out all this conjecture limits I have here placed, all these contingency orders. That's what the first thing I learned in trading was contingency orders, which were these orders you place if then orders you'd place. And that was a big deal because I just thought, well, you mean it's contingent upon? In other words, you put criteria filters into your order that speak to like what you're trying to do, especially if it's the binary world of buy and sell. Of course, taking that out of if you go into stop, market and limit style entries, and you buy and sell, you have 6 possibilities. Now it's a matter of when do you utilize these strategies, and I would say stop entry is a strategy. Because market order is a strategy too. In other words, that is an approach that really demands a lot of babysitting the market and just getting, or maybe it doesn't, right? Maybe it just involves you being a slob. In other words, you're just going to buy today because it's, oh, you know what? I always buy on Tuesday. Really? I put a 100 pip stop, I buy Tuesday. It fucking works. But I'd almost bet you that if you traded 12 pairs and your trade plan was, yeah, I put a 100 pip stop, I'm looking at my 20 pips, and I just buy in the morning anything. I don't even fucking look at the chart. You probably make money. Think about that. But the only time that would run into trouble is if you were wrong and your 100 pip stops are getting taken out. But what's the probability of that? Has anybody done a test on that? I don't think so. But you can test that in your fucking brain, right? Imagine a world. Now, I guess you could test that. You can open a demo, get 12 currency pairs, and literally be like, now, you could just probably get, hopefully, a robot. This is the only thing. I can't get a robot. If anybody knows, I swear to God. Isn't there a fucking robot, an EA, that simply buys every hour at the market? Like, can't you just set this thing every 4 hours, dude, just buy? There's got to be a robot like that. There's got to be a way to build. I'm gonna write this guy that's the robot trader guy. This guy with a beard. He's got no hair on his head, but he's got a beard. And I want to flip him upside down every time I see him. I want to just flip this guy upside down and go, dude, you got fucking like, bro, you got like, you need Afro Sheen now, right? Just flip him upside down. A white guy doing the, he's stealing somebody's identity. What is that? When they're getting angry because somebody's trying to be another ethnicity. And so just flip the guy upside down. Now he's got like curly hair on his beard. But, yeah, I want to trade backwards to what everybody's doing. And that's being a contrarian that's what I'm a contrarian trader. Like if you say it's going up, I'm like, no, it's not. Because I'm argumentative, right? So I can't take that out of me. I'm just going to be an asshole the rest of my life, so I have to get used to it. So that's not going away. And that's why I get up in the morning, right? Because I'm pissed. Otherwise, I'd sleep in. So this comfort that people are looking for, it's terrible. You would find a lot of discomfort trading, though. So people would say, well, you must be a masochist. You're going to just go out there and trade and stuff. But yeah, I guess so. You know, you just have to be up for the punishment, you know. But it's not punishment. It's a soothing financial massage. No, it's, you know, the emotions that you have when you're trading are certainly something to pay attention to. If it's making you uncomfortable, then it's just really like you just don't trade enough, I guess. You just need to keep trading. So that's the only way to go through it. There is no way to, like, the people do switch, and this is totally, the people talk about this, everybody does it, I suppose. And it's okay to do it, is to switch your approach. I don't think it's good to trade one ticket like that. In other words, if you kept switching your approach and trading the same size, I think that would be dangerous, ridiculous, because it's not what you're trading and how you get, it's how big are you trading is the first aspect of trading. Because it's not that you're building houses is not the problem. If you're building little doll houses, even these architects run a fucking model, right? They're running a baby version. And then they take it to some guy and they go, what do you think? They go, looks like shit. So they always run demos and models. When you build the actual building, this is where you're going to find out that your blueprints suck. And somebody made one little mistake on the blueprint and now you're like But this, and now you're out of code, and now you're backed up, and now the whole project comes to a halt, and the interest you have on the money that you laid down for this thing is churning against you. And so trading's no different, right? Looks good on paper, you launch it, next thing you know, there's slippage, and it's raining. You can't build when it's raining. You can have the most beautiful architectural blueprints that you've ever seen in your fucking life, and I think that's what the problem with the this Batwing shit is you're looking at like utopian buildings, and then next thing you know, you got some gangsters are tagging your building with spray paint, and you think you built the most awesome building, and they think it's like oh god, what's that? Can't remember the name of that architectural style where everything looks rugged. The post-war art where, you know, you just make it look like it's pre-bombed, you know, like ripped jeans. Make it look like you've, you know, this is American poser fashion. Man, act like you've been somewhere, even though you haven't been out of your house. Now people are complaining that people are wearing their pajamas to the store. I'm like, I don't care. Fucking wear lingerie to the store. I don't have a code. I'm not a code bigot. I'm not a fashion bigot. Yeah, just don't wear. You know, I guess you don't want. There's certain things, right? They say people shouldn't wear. And then of course, you know, the trading thing. Imagine. But it's fun experiment, right? This is what the turtle traders did. They just took people off the street and said, here, we're going to make you a trader. They're like, okay. It works out a lot better, right? If you come to trading to make money, you're already fucked. Because you have to come to trading to lose money. Because you're going to have to, it's going to cost you to find out if you're right. It would just naturally be any position in any size in the smallest or largest loss is going to cost you. People go to the movies all the time, and I don't know if they're spending on these fucking garbage movies they're releasing now, but I don't know. I don't even want to really be in this world. I mean, these people watch that. Who goes out to see these fucking movies? Another people are stuck. It's Arrested Development. The whole country is stuck in a nostalgic loop over the comic books of the old days taken to the big screen, and like, really gonna? Well, let me guess. The hero, like, let me guess how this is situated. Like, wow, this is really fascinating. Wouldn't you rather just be trading? Wouldn't you rather just be moving orders like chess? Like, I always think of like a chess game, right? If you're trading, you want a castle, you have this limit order. This is like you have this area here. You have options. Like playing a chess game. The other guy makes a move, you make a move. You can't really, if forex, if you have the analogy to chess, the one thing you're not allowed to do, which I guess a lot of these chess players were doing, is intimidating the other guy, right? Even psychologically, just kind of like body language intimidation. You can't intimidate the market, so that manipulation skills wouldn't work out, but it's a chess game. The market makes a move, you make a move. You have to make a move based on the way the market's moved. You've got to change your game the whole time it's going on. So you have many games in your head, just like you have many trade plans ready to go on deck, because this is constantly unfolding. And you don't even know, like, I mean, they used to play chess games. You know, they probably still do. But you could have a chess game where you played it through the mail, right? You mail the move to the other guy. And he looks at your move and he's like, oh, you got fucking 3 weeks to think about this move. But, you know, his move's going to determine your move. You can't create a utopian, you can't play or move pieces on a chessboard. You can't pick the most winning game that's ever played chess and play that. Because the other guy, all he has to do is make one move that didn't fit into the way you were going to play that, and it's going to fuck up. You can't move that piece there now. So you can only think move by. It's only one move at a time. You make a move, I make a move. He makes a move. The key is the flexibility to have a move for the other guy's move. And then you're recording, maybe you're writing it down, but most people are learning, recording along the way. What's the answer to that move? Do I play a safety? Do I just get out of his fucking way? Do I take his piece? In other words, do I go into the market? Or do I back off into, oh, you know what? I'm gonna just let him unfold, wait for him to make a mistake. I'm not going to get involved here. Now, you can't intimidate somebody playing chess because I could let you take my queen and you can think, oh, I'm a fucking genius. Meanwhile, you're like 2 moves from checkmate. But that's how I look about limit orders. Come on. You can have my rook. You can have my queen. All you're doing is clearing out a space, a rank, or a file for me to put you in checkmate in the next 2 moves. Because I guess you're greedy as far as thinking, I'm going to take all your power away from you. But all you've done is free up space for me to kill you. So I think about it like that because I'm a chess player from way back, and it's great. Chess is, is logic and reason. It's a fixed piece. It's art, right? It's a fixed 8x8. And if you have, say you're trading 80 pip grids, right? You have only so many moves. They make a move, you make a move. Once that piece is taken, once that order is filled, what? Then you get to the end of the day, say that's the end of the chess game, right? Did you win? The analogy is that if you're a bidirectional trader and you don't have a direction in mind, you're both chess players at the same time because you're taking the best. Whoever wins, you're a winner. You're going with the guy that's where the hot spots are. So you actually are the same guy that took if you're one guy looking down on 2 players and you're playing both sides of the market, you're cornering the market. You're like, yep, that was a good move. That was a good move. You're only picking out the good moves of each player. You are that guy for that moment. You are that bull or bear for that moment until it's over. And you're like, yeah. The party's over, next party. So you have to be very unfaithful to, and this is another thing, people just don't want to be unfaithful. You've been told your whole life. You have loyalty. All this shit comes into your fucking head. This is why, you should put a journal. I just bitch on the internet. That's my journal. But, you should have something. And you get a gut feeling about a trade. Well, that's always, oh yeah, I've seen this pattern before now. Of course, if you think that life is, there's only one chance, then you're going to go, well, that'll probably never happen again. And how can you trust yourself the next time that opportunity comes up? So I used to trade commodities. And I mean, this is back a long time ago when you'd had to babysit the market, right? Because the market was only open for 4 hours. So you had to be like, okay, it's open. Let's go. And there wasn't 24-hour trading. And so you're like, oh, boy. Now, talk about nervous because now you have this opening gate, right? It's like a bullfight. You got to get on there for like 8 seconds or something. You got to ride this bull. That opening bell, they actually had opening bells. There's really opening bells like every hour in forex. Like there's an opening bell, like it's all continuous. I'm going to buy this pound here. So I should have bought the market there. Like I was saying, if I want to be a buyer, I buy in the clock every 15 minutes it goes down there, so I'd be buying it. And so since I didn't get in at the market, I just put some buy stops in there. It's not letting me. Okay, it's tanking, so I'm gonna put buy stops in on top. But I forget what I was saying, but it's all nonsense. Anyways, it's just about being able to not have a position. As far as a bias, right? You want to be unbiased. You want to argue both sides. Let's say they tell you, how do you win a debate? You win a debate by taking both sides of the debate. So when you go to the debate, you already know what the other guy's going to say. So you have to have this dualistic approach. And unfortunately, I'm usually buying, but it doesn't matter because my profits come from selling. So British pound tanks here, it's only to my advantage because it's going to come into my buy limit bank. And if I set all the tickets properly and all the ratios properly, that's going to be what makes me win. Because like at the store next door to me, I guess that's what they call it, next door, right? This next door over. Or I think it's called next door, but I'm going to put store in there. I'm going to mispronounce it to justify my argument. But, you know, the guy next door to your store is going to have something slightly cheaper. In other words, true competition is the gas stations on the corner, right? The guy's got the cheaper price, the other guy's got better hot dogs. The other guy's in the traffic flow. It's always easier to turn right into a place and just take out right and go down to where everybody's going than it is to make a left into the gas station. Who's going to win on the corner? Is the other guy watching the car count over there? He can't see the other guy's books. Maybe he's content to just make what he makes, and maybe he's got a clientele. Of course, you don't have this in trading. People think they're like, well, I trade this currency, I really know it. No, it's just that currency has an ATR that you can get your brain around because most people are trading the same size on every ticket. So if you're trading a 1K, if you're actually going to trade a 1K, you'll notice a big difference when you go to the next currency. But all that aside is that to all the participants in the market, there's scalpers, there's institutions, everybody's in the same pool here. And there's many people on many platforms trading for different reasons, so you're seeing all this activity. And you're only trying to extract X amount of dollars out a day, or a week, or an hour, or every minute. So for using a business approach, how could you possibly survive this? If you have one grade of gas at your gas station, you have one kind of crackers in your store, maybe that's the next thing, right? Maybe the next thing is that other gas stations will be like, you know what, we only sell regular gas. Super cheap, right? Because we only have to stock regular gas. I mean, this is probably the new business model. I'm giving away my trade secrets. This is where it's probably going to, right? Everything has to go somewhere eventually. It's getting extended. This is like only for the inner circle traders at the end here. But that's how I view it. Like, what the fuck is everybody doing the same shit for? How about a gas station you go, it's get really hot. Okay, you got to have hot people working there, right? I don't care if they're dumb. Then you just have premium selected stuff that you've selected that is good stuff. When you go to checkout, I mean, right? None of this bullshit in your way. Like, you can't get to the checkout aisle. Oh, you sure you don't want one of these? Hey, how about one of these? I'm like, you're fucking, my brain's like, I'm already tired. You're tiring me. I can't even function the rest of it. All I did is come to get gas. I got to walk out of there with a bunch of images in my head. Can't you make it clean? Come in. We've got these high-end crackers, homemade. We've got this one grade of fuel. It's super cheap because we're not having to have this guy bring a tanker of all this other shit. We're killing all the other gas stations in town. Of course, then you got the people that are going to jump on your idea, right? But then you can claim, we're the original. And, but the approach, I mean, this thing where people are just literally coming up with this stuff like, well, here, let me show you. And all the guys out there, well, how to trade, they never show you how to trade. How to trade the 15-minute chart. How to trade price action. You don't even hear the guy say, well, yeah, right here I'd get in kind of medium-sized and God forbid the guy says, well, we just buy at the market. What the fuck? We just, you know, I don't know. Ralph says it's going up. So what would it matter, right? If Ralph says it's going up and they just buy like every hour, just buy a 1K with a big fat stop, just accumulate. It was like dumb luck. Look, we're making money. But yeah, it's funny, man. And then to think that people would say, well, this is the thing, the story about Coca-Cola trying to change their recipe, is that they hired all these, they went out and they tested this stuff, right? Not realizing that people weren't living with it. They were just saying, hey, take a sip. What do you think? They're like, that tastes really fucking good. Yeah, guess what? After you drink a whole bottle of that, you're like, oh, that's too sweet. That's ridiculous. I'm going to fucking die. Now, you think Coca-Cola is a successful company? They're worth millions of dollars. They make tons of money. They're stupid. Who does a test like that? And then later on, they're like, oh, we fucked up. And then he can't come out with back to the original Coke, right? So just because there's a bank, some guy asked me about what the banks are doing. I'm like, it's just, the banks are just complete fuck-ups. They're dysfunctional people all working in concert. The CEO doesn't have a clue what's going on, right? Just like this guy getting dragged off this airplane. You think the CEO would have done that? No, he's got policies in place, and the thing just goes off like a bad EA, just goes off and just starts like wrecking itself. Okay, they're coming into my buy limits. So I'm going to buy here on stops. So yeah, it's hysterical. But you got to love trading, man. I mean, it's the only business. Now, if you're lonely, I get it, right? Just get I guess people tweet or something. But I can't put a buy stop in there because the spreads just increased, and they froze one of my scripts here. But yeah, trading's killer. You could for about, and I recommend getting a Dell computer monitor that you can turn vertically. The best trading screens in the world they cost about, I just bought one here for $5. You can buy them for $20. I really did think I wanted to have a high-res monitor, but they really suck for trading. I'm not watching a movie, I'm trading. Okay. Let's see if I can relaunch this buy. Okay, I'm going to load up here. I think I got filled on my limits. So I have these are 1024, 768. No, they're 1280 by 1024s. 19-inch Dell. The ultimate trading monitor. You'll see that when you go in these, you see people trading. Yeah, you can trade on a fucking 4K screen, but what the fuck, are you serious? I can't imagine. Less is more. You don't even want it. This is almost too much data here. I'm only looking back one day, I think, here. Here's Asia. Here's the Asian Open. And then here's the big explosion here. So this is a great trade. If you're trading a burst of this or trying to accumulate, you don't want to get long during the fair value thing and hold on through the breakout, killer, right? Even for the second top to sell. Amazing trade. Okay, so I'm gonna stop buying here. As soon as this goes up, I'll stop buying, and I'm in quite a bit of margin. So every day, the goal is to make money every day for me, even if it's just a little bit. There'll be better trades tomorrow or tonight. 24-hour market. There could be a better trade in the next hour. So the fear of getting stopped out, or the annoyance of getting stopped out of a trade that you really like, a mistake is to put a wider stop on, thinking, well, I'll just put a wider stop on that. So I used to trade with stops that were so wide. It's like, wow. I mean, I literally put in a 300 pip stop thinking, well, I, I was told to trade with a stop. So what I'm going to do is just put a monster stop in because I really think this thing's going to retrace. Now that took a lot of money to do that. And you could survive that trade and you could eventually make money on that trade. The funny thing is that it fits the terms of high probability, high risk. So as the probability goes up, the risk goes up. They go together in concert. Because if you have a low risk and low probability of win, and a very small risk, you're probably going to get kicked out. You probably can't ride that train even if you're right. And if you're going to trade really big with a really tight stop so your risk is linear, you're probably not going to win. But it makes sense, right? It's a logical thing to do. I'm in big. Let me keep my 2% risk of my account. And even structured trading saying, well, I know this is where I like that. The funniest thing other than let your profits run is the one they say positive expectancy or but the stop is telling you the expectancy. I expect to get stopped out at 20, or they say structured trading. Oh, this is the funny one. You place your stop at a point which you know you're wrong. Well, how do you know when the market gets to that's not the place to get the fuck in? Because you put your stop at unfair value. If you're structured trading with stops, all your stops are unfair value. That's the place you need to be getting in. So if I sell here with a stop, I sell here, I put a stop here, and I don't take profits here. They come up and stop me out, and then it goes smashing down. I'm like, wait, so that's what they would say to you. But what I'm saying is that if you're going to sell here, you would sell here, you would have settlements here, you'd have settlements that never even filled, and maybe you took one contract off or one ticket, one order, and how you played this whole top here. There's so much going on here as far as how you could have played that. So in the chess game scenario, looking back, of course, in hindsight, you could see, well, if I would have moved this piece here and he would have moved that piece there. But you can see that it's hard to buy down here because it's going down. It's been going down on the 15-minute charts. It's really hard because it could just keep going down. It could actually break out and fall into this vacuum, this void down here. It could. Meanwhile, the pressure is building up on the top here. You have a new void forming on the tops of these wicks. So you're placing buy stops here. I have some that didn't fill yet. Or I'm placing these plunge orders. I'll risk 10 pips, 20 pip take profit. So if we get stopped out of something, I think I took profits on something here. And that last little burst. So I'll push it right to the edge here. I still got buy limits that haven't filled down here. So I'm committed to buying low. Very aggressive, but I just got stopped out of something. So I want to get back in on stops here. Maintain a certain amount of margin. I think I want to go with $200. So, you're not right or wrong. You're partially wrong. You're partially right. You're both sides of the chessboard. And there's many a move to a whole chess game. Maybe there's 100 moves in a chess game. I don't know. And I'm not a very compromising person, so I had to become compromising. I was never a fan of compromise. I was pretty much no, there's only one approach, but multiple approaches to the entry and exit, multiple price levels. Soften up it's a soft decision. You're indecisive. And that's part of the power, is to be many places at one time, which you really can't do in the real world. You can do in the trading world. You can have many strategies running simultaneously. Still waiting for stocks to open. Still looking for this to come down to get a better price down here. Now I'm going to put in a risk more than I make. I'll risk 5. I got one in here. So this is the high probability trade here. Risk, jeez, I know I got one in here. Something near the top. Anyways, it's going to risk about 20 to make 10. I don't think I wrote one for this broker. But you can imagine. Okay, I'm going to buy more here. Buy stops. Okay, so we have the trailing buy stops is it's walking down the 15. So you buy pressure building. Another bank of each ticket's got its own take profit. Okay, walking it back into this support. So we're back to the we're back to the edge of the market. We passed through the fair value. I think I'm going to bet the ranch here. Put in trying to make 30 pips here. 8 hours way down in here. So I don't know, there's probably more news coming out. Okay, that's about it. Like I said, I won't buy if it starts going up. So all these buy stops are kind of like self-triggering. Just above current price on the 5-minute. You wouldn't have bought this up, but you would have bought every 5 minutes is down the market. So here, using buy low, sell high theory, you would have bought here 1, 2, 3, no buy, 4, 5, don't buy that, 6, 7, 8. You're in an 8K from buying at the market. This top is supposed to become a bottom. It didn't. It failed. The sellers came back in there at that last time. Here's the top inside the bottom. Here is the void that the 5-minute vacuum that filled. We're buying into that. We have stops trailing on top so we can really load. And different take profits along the way. And maybe you're out of 50% of the position by the time you reach the high of that. And is it going to follow through? Right? Is it going to keep going up? Remains to be seen. Now more buy limits below. All the way at 129. Okay, let's just put some 12-hour tickets in here. Trying to make 75 pips with a 25 pip stop. And you could put the daily orders in way down here. Like, if you don't want to babysit, this is 24 hours on a big iceberg order down there. Those big dark pools. Okay, it looks like we're tanking into my orders. Let's see how this plays out. If it goes up, I'll automatically go long. And if it goes down, I will automatically go along. No sells in here. So that little top up here was the ultimate range trade entry. New highs. Okay, now we're ready to go hog long here. Stacking all the buy stops on the top of the drift down. Get pulled into that automatically. And you can make it back. People say, well, don't go and try to make it back. Why not? You can't, if you fall off a horse, you got to get back on it. And the nice thing about the markets is that you don't get actually bruised. It's a financial, emotional, if you're emotionally attached to money, it's a feeling. There is no blood for these things, but if you're riding a bull or you're, physically engaged. Okay, so here, $200, get to $300 of my hard-earned margin. And, I guess I'm day trading it, huh? And the stocks are going to open up here in 7 minutes. So we'll come back at the bottom of the hour, see what the results are here. Looking to fill this hole. So the trend line comes out of, the trend line is showing you where the vacuum is above here. Any crude trend line, anything resembling, if you want to do it on the wicks, it's going to be more dramatic because now you're taking into account volatility. So anybody that's drawing trend lines on the wicks is seeing they're seeing a volatility view, where the price over time is the closing prices. So if you built a channel off of wicks, it's going to look a little bit greedier, more dramatic than the channel that you build off of the price. So you get this top becomes a bottom and price along that channel. So you have two views of a channel. It's going up. I stopped buying at this point. And this is where you hope that you got the sizing right to get in the right amount of margin. Because I think if you buy now, you're chasing it even on the 5 minute. I think it's maybe the discipline here, not to get excited about that it might go fill this, might break that trend line. This is why if the buy limits have gotten filled, which are the rational planned out trades, the market orders could be impulsive trades if you're not waiting for the 5 minutes to finish and it's down and you buy and you start to figure that if you're going to trade 2% of your count nonsense, that you're going to put 0.05 into market orders, 0.05 into stop orders, and 0.05 into limit orders, and end up at 0.15 risk, under 2%, or whatever that is. And this is when it's going to come apparent to you that not all your money comes from, going back to the gas station analogy, that maybe people are just coming in there to buy something in the store and they don't like your gas. It's too expensive. I don't know. Maybe you have the best hot dogs in the world and your gasoline is making people's cars knock, if cars still knock. And knockers knock, right? And so that might be what you would pay attention to. And maybe you are really good at trading. I used to think the problem with all of this, well, you got to be serious and you take our 12-week transformation course. And so what makes you think you're a trader? Like, this is like, what makes you think you're a guitarist? Well, I play guitar. I mean, I suck, but I'm playing it, right? So and maybe it does sound good, and maybe you just find your own path. You don't take guitar lessons. And what if that's the case? We got 5 minutes before the stocks. Look at this thing. 5 minutes before cash market opens. You can always count on that. You can always kind of walk down or walk up into the stock market open. Here's another classic cliche pattern. You can see the crowd's behavior. You can see people not trading. So a market drifts down, just keep bidding it lower. And then there's the final sale, right? So this is how a store operates. They keep bidding it lower. They keep offering it lower. And if nobody takes notice, then they just go fucking half off, get rid of this shit, right? Because it's got an expiration date. Because they've got other shit they got to sell. They need room on there's only so much shelf space. So you only have so many tickets you can run on your broker, maybe. I just was testing a broker, and I thought there was something wrong with my scripts, and it turns out that no, I reached my limit of orders. Another thing is you could find a broker that has a limit to how many orders you can put in. But I didn't like the idea of a limit order when I started trading because I thought, no, I know where it's going. What do you fucking think? I'm stupid? So I'd buy, and I thought, well, gosh, I could have got a better price lower, but no, I don't want to miss out. Besides, I know where the market's going. And so that's another thing. But I didn't really think about the size thing till forex came, because you could not trade size like this in commodity trading. You can call up and place a bunch of different size tickets and stuff and torture the broker. The broker wouldn't even, the broker wasn't making any money unless you traded. And so you felt kind of like, gosh, I feel bad for these guys. I better trade at the market. I mean, I don't want to just place an order. They run all the way down there and place a limit that never fills. Okay, they kicked me out of my winning trades here. Got to get back in. So they just kicked me out of something here. I want to be in $200 a margin for the ride up here. So having this size... worrying about the size. Okay, I'm putting a ton of buy stops in because I don't have any market orders. I think I'm just trading one case here. Some of these tickets are really big, so I don't have very uniform sizing on this demo. Okay, I'm just going to load up there. So we're all the way back to the starting gate. And if you're trend trading this thing, you're wondering why you didn't get the fuck out up here when you were winning. And all the way back to the starting gate. This is a continuous retesting market. Who hasn't ridden this and go, you know what? I was up like $5,000 here. I should just got out. Good. I try to let my profits run on that one. Because here I'm buying new lows. We're making these new lows here. I'll put in more limits. These are only one case, so I gotta put a denser pack in there. Uh-oh. Wait a second. Here, 8 pip range, 5 tickets. These super dense orders are down here. And this is pretty tight. Okay, so we have to get in. I want $300 a margin on this move. Okay, stocks are going to open here in 1 minute. Just severely loading into this pullback. Waiting for the big, waiting for the opening bell. So there still is an opening bell. But when back in the day, there was just Globex was the 24-hour market. And that was it. I don't think forex was around. Maybe it was. Of course, you couldn't trade a micro lot. Okay, we got 15 seconds before stocks. I'm only in 200. I'm only in 100, and I'm not in big enough here. So here's where I'm screwed, right? I didn't buy big enough down here at the bottom. And since it's going up, I'd break a rule by buying as it's going up. But I could buy in limits because I'd be getting a better price. So I'd buy down here like this. I'm trying to buy really heavy here. Here's my heavy ticket. Okay. Okay, 205. I have to settle for that. Looks like we're going up. So, last chance to buy. If I was on a 1 minute chart, I certainly could wait every minute and pull the trigger, and then you could just build a position at the market without breaking any rules, right? It just goes down, you buy. It goes up, you don't. Or it goes up, you sell. If you're a seller. Okay, now we gotta wait 5 minutes for the this to go here, and there's probably news coming in at 10. So I'll come back here at in 5 minutes. So I loaded the wagon here on the British pound. This is the channel I ran. The stocks have been open for half an hour. Coming up the top of the hour here. Whole time this is plunging, I'm buying into that. I got stops. I'm getting stopped out on some stuff. I'm not sure exactly which scripts I'm running, but as soon as it started going up, I stopped buying. Now, instead of being in $300 a margin, I'm in $500 a margin now. So the market's actually chosen the margin level there because I put all those pendings down there, and the market didn't have to go down there and fill all those limits. And some of this might be scalping out here. I'm not sure. If it doesn't scalp out, if it hasn't scalped out yet, it's not going to until it goes up a little bit more. So this would be the first burst. A lot of people are selling right here. As that walks down in the 5 minute, the probability of that thing coming back up, in other words, the pressure, too much selling pressure, it's a high probability it's going to bounce. Now, do we retest the lows now? Or do we just pause here for 5 minutes? And this would be a buy. So I just put a buy stop in if it in the next 5 minutes after the top of the hour. And maybe news just came out or something. Who knows? But I'll buy if I don't think I'm in enough margin. Say I want to get $1,000 a margin. Here's where I come in with the buy limits to buy a retest of the previous low. So I'll buy more here. This way I don't have to babysit it and wait for 5 minutes to go by, because if it goes down in 5 minutes, I'm going to buy anyways. So all this stuff is figured into what makes sense as far as if you're going to buy down there anyways, why babysit it? Well, you babysit it because you want to see it happen. You want to buy more if it does happen. But wouldn't you just buy more on a limit down there if it does happen? Maybe you want to see it happen. Maybe you'd feel safer if you saw it. Like if you watched your hot dogs being made, would you eat more hot dogs? Probably not, right? You'd be like, oh my God, you got to be kidding me. But if you put the right seasoning on your hot dog, it's wonderful. So you put the right moving averages on. Everything looks great. Okay, so I would buy... since I'm already in, and I think I might have picked up a few more tickets on that pullback. This is where it's going to be tough to gauge. Is this just nothing but a spike, or is this a new trend going down? Well, if you think there's a big vacuum, it's whichever vacuum's the biggest. So before this plunge, I said we could fall into this hole down here, and I'd already determined to buy down here into this void beneath. So it could have gone either way. So the people that sold up here, they're geniuses, right? Because they sold up here. I'm going to destroy all these lines and all these arrows just to clean this up here. So there was a walk down here. Now, is that a trend? Yeah. I guess it's counter trend if you think that here's the weekly, and there's a big void here looking to fill. So here's the voids, current voids. Is that void? And of course there's a void that's beneath is bigger and deeper actually. If you consider this to be the uncharted water. So where are you? Where have you been? Where's uncharted water? But they have different looks to it because this one is short-term uncharted. This is long-term giant sea of, the other giant sea of least resistance is going to be, if you take this bottom forward to here, this whole void, which is really more about these wick tops. And so if this is, I can't move that one. Imagine that's not there, that rectangle, but it's more like this is the void that's the big problem. Once you cross the tracks here, you fill this, maybe you go choppy, but if it ever gets up above this, look the fuck out, right? Because it's coming all the way, roaring back to this, just like the yen's coming flying back. So on the 15 though, we're retesting. See, so I'm buying the retest here of this low, right? This logical entry. And hopefully I cashed out of something on a scalp. That's why you always have to be scalping along the way because a lot of these things may not work out. So here you got enough dry powder to buy this retest, which is nothing more than a retest of this 5-minute turn. So buy stops would be like right now. So I buy at the market because it's down on the 5. So if you're going to be a buyer, you want to get in here. I'm going to get buy stops here on the 5. Retest. It could go lower. And if it does, I would buy just a monster amount down there. So this is where it's like toying with oblivion, right? Oblivion is that it's going to just keep tanking. What you're counting on here is that this here, the sellers logically should come in here. What if they don't? And once we break this, there'll be a vacuum. Fill this vacuum. Maybe ricochet off this. But what if we just clear that? This, will the market stop there? Not likely. This will be the vacuum to fill. It could be, everything's a momentary trap at first. Like there's always the nick pullback, but these are definitely a serious issue on the 5-minute chart. Okay, so we're buying here, British pound on stops, 5-minute chart. Down here again in the bottom buying. Okay, so I'm in about, I don't know how many K here. Using $500 plus a margin. And I bought that British pound. Fell in the hole. Buy stops are still trailing up here. Now, if this is real money, I'd come in here and I do this by price. And let's see here. I go by price and I find the buy stops and I take them off. Yeah, I can't see where this is buy stop on there. They'd be the highest unfilled orders price-wise. So right at the top here. So without looking, I can tell if I go by price, these are buy stops. So I can start taking those off, deleting them. Now it looks like I do want to buy that as a go. So if I'm lazy, and this one I just let them go. So they're pending buy stops that have been sitting. They're kind of just positioned along these wicks tops by default now. So as the market goes up, it's going to take on more margin naturally. So this is worse than letting your profits run. This is adding to a winning position, which I'm always a little sketchy on, because unless those have scalps built in, yeah, I just kind of like to sit in one position and have it stream out so the count goes flat as it climaxes into the targets. It scales out. So it's been stock market's almost been open for a full hour. I think there's news coming out at the bottom of the hour. So the stuff I just added to buy stop wise, had I intervened here and trimmed off the trap. See, they just trapped on the wicks there. So if you are a trader that says, well, I'll put a buy stop here, right now you're down on the trade because you've been nabbed and bagged on that, right? But hopefully you bought at the market. When you see a doji, that means get in at the market. So here's a market order. Buy or sell. Lower risk. Not only small wick, but small body. Because you could have a giant wick and a small body, and that might be. The range of the bar, to me, it supersedes the open to the close, because that's going to determine the volatility. So volatility is also going to dictate size. Bigger volatility, smaller size. If you want to maintain a consistent, not a consistently winning trader, but a consistently sized trader, and the wins take care of themselves, right? That's the old saw, is that worry about the losses, the wins take care of themselves. That's definitely a truism. Okay, I guess we're always waiting here. This could be accumulation or redistribution at this point. So I'll buy. If it comes down again, I'll put in hand placed orders here. Going to buy, retest here like we just did here. And on the 5-minute chart, you could, if it's down in 5 minutes, 3 minutes from now, you'd just buy at the market. Or put a really close buy stop on top like this. I think I got stopped out of something there. So I got some of these. There was a buy stop sitting up here that just got filled, and that's how I'm down. Because if you're generally buying, though, see, this is the thing. It's not exact. You're generally buying and you're generally selling because you have like this just crazy amount of different, slightly different orders. So generally, you're a buyer. Now you're also a seller for profits. So generally you're trading. And I think that's the key, because if you listen to, it's the dynamics. Isn't it the dynamics that's making you money, market dynamics? It's not the fact that the direction, it's how loud is it? How quickly will it move? Because if the market smacks down 20 pips in 20 seconds and then retraces 10 pips in a minute, so it slams down and it drifts up, and if you pick the right segments and you got into the right size on that, that's a great trade all day long. The market's known for going up and down. So maybe this is a downtrend. Maybe that was the last chance to sell there, where I got trapped on an old buy stop. So I guess we're going to have to wait before I can put a buy stop in. I got to wait 30 seconds. So I look at it like this: if my buy limits aren't filling, then you know, if it's coming into this, it's supposed to come into this support to buy. And if that doesn't happen, and I'm not in big enough, I'll buy at the market. So here, buy stops, right? Buy at the market right now. We just closed down. Okay, now I got orders that go way deep down now, so I don't have to worry about adding anything below. Just trying to get the size right here for a rally. Okay. Gotta put a few more in to get back to $600 as margin. And then just let her go. Nothing you can do now. So I stop buying as soon as it starts going up. So I'm on the 1 hour chart. I've been buying the pound all day long on pullbacks. So as it comes down, you can see my orders here to buy. And this is on stops, and I'm not going to add anything. I'm at $720 a margin. I'm starting to cash out of stuff. Here's another reason to place buy limits down here, which these were buy stops. The limits are actually been filled down there also. But you see this bottom. If you can't see this bottom, you shouldn't be trading. You place the buy limits there, or you want to come in on top and you feel safer putting buy stops in the top. Something cashed out here on that last burst. But see, this is a false start. These are false in the sense of we didn't fill. In a perfect world, right? You buy here and it goes slamming up to here, you're out, or it goes through the roof. If it's really a giddy market, it's going to keep smashing north. But here we're just going to hopefully cash out as it comes up into this stuff here, and that's going to be our exit. Is cashes right up into these blue things.